This meeting is being live streamed and we are live on YouTube. If you're listening on the podcast, this is the CCM Investing Power Hour. This is the 26th one we do, and we do it live on YouTube every Thursday, 12 p.m. Pacific time, 3 p.m. Eastern time, right as we head into the end of the trading day. And the only rule is that we have no preparation. So we come in, we know we're going to be talking investing, we know we're going to be talking business, financial markets, whatever, but we cannot have any formal preparation, just stuff we've seen in the last week. Ryan, how are you doing this week? Are you ready to talk? I guess we have no idea. So any fun topics on your mind right now?
Well, Google is shutting down Stadia. I find that kind of interesting. For anyone that doesn't know, Stadia was Google's cloud gaming initiative that they were working on. And they are not, I think most of our listeners are probably our age and are like familiar with the gaming landscape. But if you're not familiar with the gaming landscape, they are not really a big part of it in any way, or they haven't been historically. And so this was kind of a random push, I guess you
Yep.
could say.
Yep. And we'll get into it. But first, we need to talk about our new sponsor for the rest of the year and hopefully even longer. And that is Seven Investing, the presenting sponsor and exclusive sponsor on Chit Chat Money. Seven Investing members get the first of each month, 7 research reports. As you can tell, they like the number 7 at about 1,000 to 2,000 words. They're write-ups on an individual company and giving mostly, a buy recommendation and why the analyst likes them. They have 7 different analysts that each write one up each month. If you want to learn more, I'd go back to some of our interviews with some of the team, check out their website. We're actually going to be doing a segment this week. We haven't named it formally, but basically just maybe talking about some of their free stuff they offer and making it a little segment that will be fun to discuss because they've put out some great free content as well. So check them out at seveninvesting.com. And if you go to the subscribe page, make sure to use our promo code MONEY. That is MONEY. If you, for some reason, cannot spell money, is in the show notes. But yeah, use promo code MONEY and get $100 off your annual subscription for life. That is a 25% discount on their premium subscription. We're going to be talking about them more throughout the episodes for the rest of the year. So you get a great overview of what their offering is. And we'll surely have some of the Seven Investing members on the show.
Yeah. And I'm looking at their August Recs, which I thought were a fun bunch. One of them is something that we've been buying.
Okay.
I can't say what.
Well, we can't say either. Yeah.
So maybe that's the tease that listeners need. But yeah, the code is money. So interesting Recs. Recs will come out. Shoot, they will have come out. Their October Recs will have come out by the time this airs on the podcast.
That is correct. So check them out. Perfect timing. And if you try them out, make sure to use our code money. All right, let's get to the topics today. Stadia. Start out with Stadia, Ryan. Keep going on with that if you want.
Yeah. So the news this morning is that they are going to start to wind down the Stadia business. Apparently, there were thousands of employees in this Stadia initiative, which is shocking to me. I did not know they had that many people working on this. I'm just kind of reading through it now. I mean, I saw the headlines. Basically, they're going to officially shut it down on January 18th. There was a lot of people that there was kind of Stadia, I think, was eating its words probably now. Like the head of Stadia was saying, no, we're really committing to this. This is like Google is really committed to getting into gaming. And then, 3 years later, they've shut it down. And then Stadia themselves, like 3 months ago, was like, no, we are not shutting down, blah, blah, blah. Like we're really committed to this. Lo and behold, 3 months later, they are shutting down. So kind of interesting. It's Google's stock is down today, and that might just be correlation to the market generally because the market's down when we're talking. This is Thursday, so I think the Nasdaq's down like 3%, but
3.6. But who's counting?
I guess everyone, but yeah, so I don't think investors are reacting to the Stadia news, but what it does kind of me tells me two things. First of all, there's a duopoly in the console business. Well, I guess you could call it a, what is that, a triopoly? But if you
Oligopoly.
if you include Switch,
Yeah.
is
Oligopoly.
is oligopoly three? All
Yep.
right, well, it's an oligopoly then. But
Oligopoly is it's many. So that's what you call it.
is there one for three?
I mean, you usually say oligopoly, monopoly,
Whatever.
duopoly. Oligopoly is 3 or higher.
Okay, so I guess you could call it an oligopoly, but really within like the AAA games, like I would say there's a duopoly pretty much. Switch is kind of its own thing. It's sort of its own. You're just playing a different set of games on the Switch, and so it for me confirms how much of a moat those two businesses have and how hard they are to disrupt. Because there's just no way. Like, if any company were to do it to try to like be an entrant into the market today, I think Google would have the capability to do it, and they're at least doing it from a position of power. There's really no way for them. They've basically thrown in the towel. They said we weren't able to get enough users on Stadia's system. That totally makes sense to me. I don't know why anyone would be on Stadia over PlayStation or Xbox. So, yeah, they are shuttering it. But it also tells me that perhaps Google's core business right now is suffering a bit because they're trying to hit their numbers, probably their profitability numbers in maybe the next year, or maybe they think that the next year is going to be tough. And so they are shuttering some of their more speculative operations to make sure that they meet their guidance. Am I reading too much into the tea leaves, or do you think that's realistic?
It's definitely possible that they're doing that, but I'd also hope they just saw that if they had all these employees and no users, that it was just hemorrhaging money. And like they mentioned, the last few months, they're doing some cost restructuring or however like they call it, basically getting rid of bad expenses that are not really, getting a good return on them. And this seems like a great candidate, especially if the expenses were much higher than we thought. You got thousands of employees. Let's say it's like 3,000. You're each paying them healthy salaries because they're in that field. Probably everyone that's in a technical role is, I don't know, 150,000 at least, probably closer to 200,000. That's expensive. And there's also the cloud costs. There's also the just game acquisition costs, where the rumors were that they were paying, say, Take-Two Interactive, I think an upfront cost of like, I mean, it's not that relevant for either of the businesses, but like tens of millions of dollars just to get Red Dead Redemption onto the streaming service because no one actually wanted to bring their games on there. So it kind of shows the network effect of the Xbox and PlayStation ecosystems where, yeah, Xbox and PlayStation don't even have to pay anyone to get on there. Maybe they pay people to do exclusives, but
They're
you know,
paid. They're paid for for the distribution on their platform.
I mean, no, I'm saying they don't have to pay they don't have to pay studios to bring their games onto Xbox.
I know. I'm saying they get paid.
Yeah, yeah,
Studios pay them to be on their platform. It's like the inverse.
yeah. So yeah, I mean, Stadia was was one of those where everyone said at the start it was destined to fail, and is pretty obvious it was. I don't even think we weren't even in the industry. I mean, I think anyone could have looked at that just kind of has played video games and knows that that wasn't going to succeed. Springboarding on that, it made me think, does this make you optimistic or pessimistic? Because I didn't really know how to think about Netflix's strategy within gaming. Because it's a little bit different. They're not going full throttle, and it's not trying to replicate any of the other current platforms.
Yeah. I don't really know what Netflix's gaming strategy is, honestly, because they've kind of gone all over the place between buying like mobile studios, developing their own games, and the games themselves, there's no real like theme to these things. Like some of them are like licensing or leveraging their own IP to build new games for it. But then some of them are just like random, like Point P. They acquired a game called Point P, which is,
what the heck is that?
I don't know. It's like one of those like mobile casual concept
Oh,
games. Like maybe
okay.
it's like puzzle type stuff. It has
The
no tie to their IP.
the waiting in line and sitting on the toilet games.
Yeah, I mean, pretty much. So it's just like there's no cohesive, and they haven't been very clear about what their strategy is. They said any content spend that they're going to have on gaming is going to stay within their content budget. So it'll just replace linear content or like video content. So it's not like it's on top of it. It's basically just to replace it. So at least they're not taking like extra risk on top of it. But I would like them to be a little more clear about what their strategy is. I don't think there's any world in which they can really be a winner in the AAA business or like the console game business or whatever ends up being cloud gaming without acquiring a studio.
Yeah. Well, or they gotta. I mean, they'd have to spend a lot more money. Um, I kind of think there's just a few different issues with Netflix's strategy where it seems sound like, all right, we're gonna invest in some games, we're gonna make them a behind the subscription, and if they get a lot of use, that's another reason to subscribe to Netflix, right? But given the high, okay, so if you want to attract lots of players to games, you have to make them super interactive, given the high bar with all the other games out there, and in order to make them highly interactive, and constantly having updates and all that good stuff, which is what all the popular games do today, you have to spend a lot of money on development costs. And in order to get that return on the development costs, you typically have to monetize through multiple different strategies with the upfront game costs, microtransactions. Advertising is not as big, but has been growing, especially in mobile. And with Netflix's strategy of not having advertisements right now, maybe with their launch of the advertising supported tier, they will do advertising. And then not having, game purchases with any a la cartes and not having microtransactions, I just worry the return on the investment, because there has to be so much upfront cost, is not going to be high. And if they stay with the really, really easy to make mobile games, it's just not going to move the needle, because those games are a dime a dozen.
Yeah, it's also harder to calculate like the return on investment if there's not like a la carte transactions or a la carte purchases or microtransactions. Like if it's just a part of the bundle or just a part of the subscription, like you can see like, yeah, they played with it, like they played Point P or whatever, they played your Witcher game, but would that have kept them there? Like, is that the actual thing that's keeping them there? I think it's probably hard to tell without any other form of monetization, like
I,
how much they really value it. So
yeah, and also
I
it's
don't know.
kind of
That's
the
kind of, yeah. So the monetization thing's the other part that frustrates me about like they have not been clear about the strategy. If it's
yeah.
just a part of the subscription,
It reminds me,
it's like a
yeah.
waste.
So you don't know whether, like, okay, if someone, yeah, they can maybe see if churn improves. Um, and we don't know the numbers; they know better than us. But you have, okay, let's say you have a world, two separate worlds, one where Netflix doesn't do games and one where Netflix does games. And you see that someone plays, like, this X individual user is playing video games on Netflix in this other world. You don't know whether they would not churn if, or excuse me, you don't know whether they would churn if the games weren't there. It kind of reminds me of the Amazon Prime, where they're spending $10 billion or whatever on content. And you don't know whether that's actually keeping people around, if you get what I mean, or whether it's just wasted cost and the churn actually isn't down because of it. Uh, Scotland,
Yeah.
which thank you for the comment. I think we agree on this one, says Netflix should lean into first party games about their shows, like a AAA Stranger Things title. Ubisoft also, oh, I guess we'll keep the second one in the acquisition here. What do you think about that? But it will require lots of more spending. That's kind of the big hiccup here, right?
I think it's just it's a totally different craft. Like
Takes
it,
like five
it
500,
requires
yeah.
totally different talent to have success with it. It requires just totally different teams and
Hundreds
typically,
hundreds of developers.
but yeah, beyond just the actual developers, like it's a different like there's a creative component to it that's just different and requires a different skill set than creating a show, I would imagine.
Yeah, and a mobile game and a casual mobile game.
Yeah, so I would rather just see them license it like Disney
But
does with its IP.
yeah, but that's just not a needle mover, especially maybe it is if you have Disney's level of stuff, but I think Netflix should either do what you're saying, yeah, and not embrace it heavily on their own platform, or acquire a studio, or excuse me, a publisher like Ubisoft is probably, small. Like Scotland said here, Ubisoft keeps begging to be bought. I agree. They have some great IP that could be used. You could have Assassin's Creed, with Netflix would be a great pairing. What are the other
But they,
ones?
but
Tom
the,
Clancy, Far Cry. I mean,
yeah, but they just got that 10-cent investment, so
yeah, it's
they're
just
not gonna be bought.
it's not gonna, it's who knows though. Tencent is, they're an investment company for through and through. They could, if they give the right, the right price, um, they would go with that. But the thing is, if you're gonna invest internally on AAA games, you can't distribute solely through the Netflix subscription because it'll be a failure. Unless they can
Yeah.
crack cloud gaming, which comes back to Stadia. There's just it's the mountain they have to climb to crack cloud gaming, Netflix, is high. It's just I think near impossible for them. The only
How would they even do it? There's no way. There's just like,
Well, you'd have to go to one of the infrastructure providers.
that's not what I mean. I mean, there's no way that you'd have to get buy-in from all the publishers, which we saw Stadia's problem with that.
A lot of upfront costs on that, and they didn't even get the users because you can play them anywhere.
Or it'd be so costly to develop your own games to build on it that it just isn't worth it. Isn't worth the risk. And I'd be surprised if there's like a ton of overlap. Like the bulk, all right, yes, Netflix has a huge user base, but the bulk of their like not that many of them are probably like intense AAA gamers.
Yeah, they have, I think, estimated. They have 200 some million subscribers, but like 800 million active users, just because of the family overlap and the password sharing. Excuse me. Very few of those are gamers. What? Probably 50 to 100 billion, something like
AAA
that.
gamers,
Yeah,
like
I mean,
gamers.
yeah,
I
because
guess it opens up the pie for more than console gamers, but like you got to get a controller, right?
we're talking if Netflix was going to do cloud gaming, right?
Yeah, you'd have to get a controller.
Yeah, and that's easier said than done. It's hard to make one that works well.
Yeah. I mean, maybe there's a world in which they can do it, but I don't see them getting the buy-in from the publishers. At this point, I think Xbox and PlayStation are like the railroads, essentially. Like Xbox is trying to become more, but those two consoles are like the railroads where
Yeah.
their relationship with, and like EA and Activision are like the Standard Oil, or like um
Kind of. There's a lot
who was
more.
it that was getting the sweetheart deals of like all the railroads, where it's like we have this relationship, we don't want to ruin it by letting you get like having to build for a Netflix game or a
Standard.
Netflix
Standard.
infrastructure.
Uh, I don't know. Standard Oil, U.S. Steel. I forget. Something like that. It's sort of like that,
It
but
just feels really hard to disrupt that relationship between the
yeah,
publishers and the console systems right now.
yeah. The only people that can disrupt them are themselves. What they're trying to do by building out I mean, Xbox is a little more ahead, but Sony and Xbox are both trying to build out cloud services and subscription services or whatever with the cloud gaming stuff. And maybe that evolves beyond the hardware eventually, right? But they're the only ones that can do that because they already have the user base that they can utilize, right? They're the only ones that can transition their core users over and then expand their user base. No one can come in and start. It's just there's too many hiccups, I think.
You know, I
Or
find it funny. I almost think the more that I think about it, I think the path to success in gaming for them is AAA before mobile.
for Netflix.
Yeah.
Explain your thesis.
All right. Let's say they launched a gaming component within their Netflix app. So you could pick either games or movies, whatever. Games or linear TV, video TV. And then you can go, and they already obviously do have the scale. They have tons of, what'd you say, 800 million active users. People could go to the games. If they've already reached that level of scale, I think there's not that much harm in assuming that the development doesn't change that much for like EA and Activision to release a game on Netflix as it does on Game Pass. You know what I mean? Like, so if the cloud gaming, if the two
In
basically
a
games are the same,
in a
like
world
code
where
bases.
in a world where the infrastructure for cloud gaming is all sound. It's all ready.
Right. I think publishers would be willing to put their stuff on there. Netflix could basically replicate what they did with video, where where they're using everyone else's content, running probably a higher price subscription for gaming included, and then occasionally releasing their own games as well and doing it gradually. That seems more viable than this like incoherent mobile strategy. Like,
Yeah.
I'm not sticking around on my Netflix subscription because I had a fun time on Point P or
The
one of these
stranger
mobile games.
the Stranger Things mobile game. Yeah.
There's
Here's the
no ties other than Roblox. There's no like there's very little mobile gaming loyalty, I feel like I am
oh
not
yeah.
going to.
You mean on platform or what?
So let's say if a game was only on Netflix, I couldn't get it anywhere else on my mobile phone, and I didn't have a Netflix subscription, I'd probably just play a different game. There's so many options.
Yeah, I agree with that. Also, here's the only hiccup with that, say, the Netflix AAA strategy of, licensing or whatever, and then trying to produce their own, and where it makes it way harder than what they would do in TV and movies, is that in video games, for AAA especially, a few franchises dominate playtime, and the same franchises seem to dominate each and every year. With sometimes a new one comes out, Fortnite, Valorant, gosh, I'm forgetting a few other ones, but it's few and far between. Apex Legends. Um, so if they were trying to produce their own AAA content, it would be like you can't just say, okay, we're gonna lose The Office and that's fine. It's basically like if The Office had not just how popular it was on Netflix, it was extremely popular on Netflix. It would be like if The Office was 5 times as popular from watch hours, with how the comparison is to a game like Grand Theft Auto, Fortnite, FIFA, whatever.
Yeah, but I did see that if you're paying like a subscription to access to all these games, like within Game Pass, I've seen a lot of people say that they're more willing to
Mm,
try out new games because it's
that's
free, it's
fair.
included in the membership. So maybe that sort of is an equalizer across engagement time.
That could be true. That could be true. I
Um,
I still think it would be when it wouldn't make it as diversified as TV or movies though. I don't think.
no, I mean you still have like the on any games that are interactive, you still have to have like
Here
you have to reach a certain level of scale.
here's a good point by Scotland as well that I think you brought up earlier, but forgot to bring up for the problem here. You would have to make the games exclusive to Netflix, and you can't do that and still be successful because the only reason the big publishers are successful is because they're across everywhere. If a Netflix game was not on PC, Xbox, PlayStation, Switch is kind of its own beast, but still, um, yeah, you're right. You know what I mean. You'd have to get such large scale to get that return on investment.
Yeah, it'd be inferior also to Game Pass if they were exclusive, like if they just kept it all on there.
Yeah.
Like,
All right, let's talk. I think we've hit 20 minutes on that, so let's do
okay,
another topic. One more, unless you have final thoughts.
well, while we're on the gaming thing, apparently this Saudi gaming investment fund is thinking about. They're apparently rumored to be acquiring a company for $13 billion like tomorrow.
What one is that? Hopefully it's not
I have no
EA.
idea.
Hopefully it's not the two ones in our portfolio that are traded higher multiples. It probably
I
wouldn't be
know
that.
13 billion
Maybe
is
it,
just such an awkward, like I can't think of any company that would be. I
Could be
pray it's not Take-Two.
well, I mean, that would be, come on, that would not happen. But because Take-Two's trading at like a $20 billion market cap. However, it's probably private, right? It could be like
Could be
the maker of
Ubisoft,
Ubisoft. Oh yeah, Ubisoft's a good choice.
but
Maybe you're gonna be eating your words there, but they just had the Tencent investment, so
it feels like they wouldn't. It feels like they wouldn't have done that 10-cent investment if they had this one, if they had this acquisition queued up. The other thing is like maybe
that's true. Yeah,
how big was Capcom?
Capcom's not gonna sell given their philosophy though. Capcom also was much smaller than that, much smaller. If we're looking, let me just give a quick look on
Trillion
CoinFin.
yen.
Yeah, I went to the US. It's like $5 billion. I just don't. There's that would be quite the investment. I'm guessing it could be. I'm forgetting. I think it's Riot Games makes PUBG. That's very, very popular. Riot Games. I think that could be it. Could be private, if you get what I mean. Like, not a publicly traded company. Is it PUBG? I have no idea. There's so many games. No, League of Legends and Valorant. I mean, yeah, that's League of Legends and Valorant are very, very popular. All right. Well, that could be exciting. Good news, or not good news, but just something to follow.
Seen a tweet from an hour ago that says Meta CEO Mark Zuckerberg just told employees the company is implementing a hiring freeze and warned there will likely be more restructuring and downsizing to follow. Okay, hear me out.
Could be good. Could be good there. That could be. Okay. Here, what
Is this? Does Oculus turn out to be Stadia in 2 years?
Oh, the user adoption has been better because we've seen the numbers on the hardware purchases. However, the surveys on whether people leave them and don't play them after like 2 months are fairly high. So I think there's a chance, but not as high of a chance because they are convincing people to buy the hardware. But if it's like, what is it, 95% leave them sitting on the shelf after a few months of playing some bad games and they get some headaches. Yeah, but who knows? In October, which I guess now this month, they are apparently launching the next gen. So, I guess if that's a huge leap forward and some of the headache room, the stuff, all the problems with VR go away, which I doubt they will, but just this next generation, I think you could be right on Stadia. I don't think they're going to let it happen though because of all the money they're investing.
Yeah, that's true. All right, let's move topics. We've hit on gaming for a while.
We got a
Yeah,
comment here
yeah.
about Spotify's margins. Let's see. Thank you, Sound Deep. Spotify margins are barely gap positive, long-term forecasted to be less than 10%. What's the bull case at this price? Well, I think simply if you're bullish on music streaming in general, which has been a nice little steady tailwind, and you're bullish on their investments into podcasts where they've dominated market share over the last few years, or dominated, market share gains and are gaining on Apple Podcasts and other people, and then audiobooks and some other audio mediums on top, but that's really not important today. Those are very speculative. You have a market cap of 17 billion. Enterprise value is slightly lower. I think gross profit is about $3 billion. So we're at about 5-ish times trailing gross profit, and they can convert about 40% of that, I'd say, to cash flow. And if we look at GAAP operating margins, they will always be lower than cash flow because they have a permanent working capital advantage, similar to Amazon. I'd say at their steady state, you're probably trading at 15 times to maybe 15 times, say, free cash flow here. Or say operating cash flow. Maybe they have some CapEx. Let's make it a little more conservative. Operating cash flow. If the revenue keeps growing, I think that's how you make money. If that, sorry, that's a lot of numbers. That's a lot of numbers there. Keep going.
Their guidance is for greater than 10% operating margins. Trying to see what he said here. To be less than 10%. Yeah, no. Long term, I believe they got it for north of 10%.
That was operating, so I guess net might be lower, but yeah.
Yeah, if you go to their investor deck, I think they they lay it out. They were a little optimistic, I think, maybe even more optimistic than us, but
Yeah, they said 100 billion in revenue and 20 billion dollars in, or no, yeah, what did they say, 20 billion dollars in operating income? So they're trading at less than 1 times 2030 operating income. They hit those numbers, but that might be a bit aggressive.
we got another comment around, hopefully that answers some of your Spotify stuff. We've also written up, and it can be, the financials can be tough to like talk over on the podcast. So we've written up Spotify a couple of times on the Arch Capital website, and
We just did a show on them for the CCM Plus. A little tag there. I know people will be seeing the ad during this episode, but CCM Plus, $5 a month. You can listen to that episode on why we own the company.
also I know I hate, not, I kind of hate doing this because it's like, well, if you want our full research, you got to pay $5 a month. But within the CCM Plus subscription thing, there's our research files and our financial models in there, and that pretty much lays out the bull case in a quantitative way or on a spreadsheet. So maybe it's a little easier to digest looking at it on a spreadsheet. So if you want that, feel free to subscribe and do it on whatever your podcast player is, and then just email us, and
Yeah.
we'll throw you in the drive.
Yep, that is how it works. All right, here's the other comment. How do you guys think? I think you just missed a question. Caesar here. Thank you for coming back, Caesar. About the pundit calls for the market needing to fully capitulate. Basically, what he means here is that there's people calling for the market to go into that sharp downturn like there was in 2009, right at the end, where everyone's totally panicking. He says the pundits seem to be obsessed with hitting a certain VIX number, but it seems arbitrary to me. I think you're right. Yes, that has happened a lot with market downturns, but they're extremely hard to predict. If you're someone that has the majority of investors are, hopefully have a job and have income coming in. If you see stocks at good prices, just buy. Don't worry about timing the market. It's futile. And yeah, maybe some better opportunities will present themselves a couple months from now, but maybe they won't. It's so it's a coin flip, really. So that's not how we think about it. Some people might think about it differently, but that macro stuff, the VIX and whatever, I've yet to see. What's the good? Has there been is there the legendary investors that are macro traders? Are very few and far between. What is there? Soros, Druckenmiller. Maybe that's it that I've had stood the test of time.
But even Druckenmiller has some of his calls have been wrong.
Of course. So have Buffett's. I mean, so some.
You can make money still, even if you're wrong sometimes, obviously. But no, I think like everyone's saying like we haven't even, we're not even close to capitulation yet. It's like, who cares?
I don't know. Yeah, right? It doesn't.
It feels a little pretentious to me when people say that. Like, I don't know. Like, you guys don't know how bad it can get. It's like I walked uphill to school in the snow both ways, miles. Yeah. It feels like that, like the old guy yelling at the clouds.
Yeah, the two things there. The one, the more irrationally bearish people get, the more you should think that it's a good time to buy. Also, you probably should just ignore what other people are thinking because it just clouds your judgment. Two, oh shoot, I forgot the other one. Oh gosh.
It's always going to seem the most bearish at the lowest.
That's what I was gonna. Yeah, exactly. It's always everyone, by definition, the lower prices go, the more bearish everyone is going to seem. Because if they're more bearish, the prices are going to go lower. That's they work hand in hand. It's not like everyone can be bullish when the market was in the end of 2009. Everyone was bearish. So you have to say, okay, and I think the right thing to do, unless you're a David Tepper, a Druckenmiller, or whoever, you have to just ignore that. Right? Like it's just the return on brain damage is just too much. And you're probably going to make a mistake. So we just ignore it fully.
At the same time, those thoughts, like the pessimistic thoughts, certainly fill my head more so in these moments. The
But that's, you have to fight them. Yeah, it's weird. You have to fight your own brain and be like, but that means it's like,
but they're like, okay, let's say the recession gets worse, right? Which is a very real possibility. Unemployment could go up from here. Inflation could continue. Purchasing power, consumer spending could get worse.
yeah, but the
Those
market,
could.
those already got priced in 3 months ago. Like
I'm
the
talking about for your
markets,
individual stocks, though. For your individual businesses, the fundamentals could erode.
yeah, but that's got that. I mean, what I think, unless for some stuff that's still a premium valuation, I think that got priced in. Major on average a few months ago. The market typically is pretty good at snuffing out these things. And I think they're very for it is typically, I'm a big we're big like anti whatever efficient markets, but usually it's fairly good at saying, okay, like there's a lot of bad indicators here. There's a reason we're selling off, and the numbers have looked bad 6 months now. 6 months ago, you're like, why are we selling off? Except for outside the Ukraine stuff, things look fine. But 6 months later, you're like, okay, I get why we're selling off. But when things are the worst is actually when, like, the market will. What I'm trying to say here poorly is that the market typically can historically has recovered before the bad news ends. So like using that as a proxy is just not smart, in my opinion.
Okay, I saw, and this is kind of a shameless plug for our sponsors now, but I read an article on 7investing. It was one of the free articles, and it was a good title. Basically said, would you rather be right or make money? Before getting into the article, what are your thoughts?
Well, there's a lot of ways that, and this is by Christoph. Sorry, I can't pronounce your last name, Piekarski. You might be laughing if you're listening to this, Christoph. But one of their lead analysts, yeah. They might be going a few different ways here, but I think that is correct. Like, it's a correct question to ponder. But yeah, continue.
In investing, what would your answer be?
Oh, I mean, make money. But you want to be right, but usually you have to be like,
Usually the two go hand in
usually
hand.
usually goes hand in hand, especially if you don't short.
Yeah. So what if you were completely wrong and made a bunch of money? Would you be fine with that?
Yeah, but usually if you do that, you're going to think you're right and then make even more make a bunch of mistakes
I feel
in the
like it is
future.
hard to be wrong and make money.
Yeah, well, you can get lucky. Like
I suppose.
then
You're right for the wrong reasons.
yeah, I guess. But yeah, what did you think of the article?
I thought it was interesting. I also think it's like applies to more than investing. Like, I think you see it in politics all the time. And this isn't not on the making money part, but it's like, would you rather stay true to what everyone else who around you believes, or would you rather like face the truth? And
Oh,
it's like that Munger quote of it's like, if being right makes you unpopular with your
friends.
with your peer group, then to hell with them.
Yeah, get new friends or whatever. Yeah.
Yeah.
Munger doesn't have many friends, but
I
he is right.
know.
He is right a lot.
He's
No,
lived that out
no, he
pretty
doesn't
well,
care.
but
He's down in Montecito hanging with Oprah.
it's kind of an
Here,
interesting idea.
here's a quote from the article that I thought was interesting. Again, use our sponsor, or excuse me, use our code for our sponsor, money, get $100 off your annual subscription. Very cool to try out, and you get that for life. And also, if you're kind of just interested in their philosophy, they have a lot of free stuff like this article as well. We're going through. Here's the quote: "When investing in equities, being right often does not mean being profitable because of built-in expectations in terms of the market price at which you can buy. Rather, it is the magnitude, bolded, thank you, Christoph, by which you're right that your wealth will be built on. And for there to be oversized returns, most people have to be betting the other way. Usually, that's how gaps between perceived value and actual value are made." that kind of goes back to the topic we were just talking about, where during the bear markets, when everyone's panicking, some stocks in the short run might look like they've been terrible investments. However, if you have if you think it's a good investment and everyone else thinks it's not, that's likely the opportunity. That's likely where the best opportunities are. And the upside, if you're long, excluding shorts here, this is long only, is theoretically infinite. I mean, it's not just that you can double your money, you can 10x your money over a long period. It's interesting. We don't typically have that philosophy where make a lot of bets and they're higher risk, but some of them will work out extremely well. But there's a reason that has worked for venture capitalists, people like Seven Investing, stuff like that, where it's hard to feel like, okay, we're taking that big risk on this company. And yeah, 70% of our stocks are going to be wrong, but that you can only lose 100% of your money there. And most likely you're not going to lose 100%. You'll probably get cut in half, maybe, if you're wrong on that stock. But the ones that are right are going to go up by 10x over, say, a decade. And that makes up for all the losses. So it's important to, I think, doing that up front, if that's going to be your philosophy. I know a ton of individual investors have that philosophy. Having that, thinking through stuff like that or reading articles like this up front can be helpful, because like, okay, when 2 or 3 investments go poorly, or 5 or 6 or 50% of your portfolio was duds, that that's okay. You expect that to happen, and you move forward.
Yeah, I agree. We had, well, there's 2 things. We had a little bit of a debate yesterday around buying a home, which I think is worth discussing now. You think buying a home right now, well, I wouldn't say you think, it's the least affordable it's ever been as a percentage of income, right?
Yeah, my thoughts are, if you can wait. But here's the thing, I retweeted something to hopefully you'd see it, because I didn't think of texting you to prove my point. Oh gosh, where is it? Where is it? Mortgage applications for a home purchase are down 29% from a year ago, off 43% from their seasonally adjusted peak in early 2021. So I think
prices
people
are still elevated.
Yeah, it takes usually multiple. It's not like stocks. It takes a lot of time for price adjustments to flow through. A lot of people are the anchor to the high price.
What if, though, there's just such a shortage that they don't have to come down? Shouldn't prices be coming down like significantly? Should they follow the mortgage applications?
That's what I'm saying. They are, but it's not. It's gonna take. It just, yeah. There's a lag effect. If here's just the thought that concerns me on just.
All right, let me put you in a position. Let me put you in a position then. Or actually, all right, go ahead, finish your thought.
As it from a broad economic perspective, as someone who is not an economist, if prices stay the same, so much more money, and the number of people that are buying homes stays, say, roughly equivalent. So much more money is going to be going to mortgage payments than any other stuff. It just, I think, will crush the economy. And yeah, okay, a lot of people are locked into stuff, but incrementally, when I say crush the economy, that's wrong. But like, what I meant to say is crush the spending power of a lot of these people, where their incremental spending on whatever, consumer goods, anything, will be diminished because you're spending twice as much on your mortgage.
It's good. It'll make us more rational.
What?
It'll make us spend on things that are important, not waste money spending on stupid stuff.
So you think that shelter costs, we should aim for those to be higher over time?
I don't think it's that crazy that shelter costs are by and large the biggest expense.
Oh, that's not, no, No, that's not crazy, but I don't think our goal should be for them to be higher. I think our goal should them to be as low as possible.
Yeah, I suppose. I don't know. I feel like these things have a way of sorting themselves out.
Oh, it'll sort themselves out. Yeah. And I think the prices are going to go down. Either like
Okay, so
Jay,
that's a perfect
look,
question. That's a perfect lead into my question.
all right.
Scenario: you're married, you got 2 kids, young kids. You're in, let's say, a 2-bedroom apartment. Would you wait to buy a house? You
Oh,
have the money to buy the house.
Everything's very, there's every situation's unique. You don't know. What, how
You tell
big's the
me you
apartment?
try to time it, or would you try to, like, you're planning to have a bigger family, let's say, which
How big's your apartment? What neighborhood are you living in? I mean, all these situations are unique. I don't think you can pinpoint. You have to
I
take it
don't
on
think you'd wait. I don't think
I know,
most people are
but
trying to
using
time
that,
it.
that's is that a straw man argument? I think that's what you like. I think you can't use
I
the
don't know if
specific
that's straw
scenario.
man.
Straw man is opposing a position into an
With what?
extreme
Yeah,
belief and then arguing it. No, it's not. It's using just one situation. I don't know what if this is a straw man. Using one specific anecdote to say the whole thing's wrong. I just think that that's the specific scenario. That's not everyone, and that when you're looking at this stuff, you just have to look at the macro data because every situation is unique. Yeah, okay, some people are going to want to buy a home because they have a big family and it means stuff for them. But in aggregate, if mortgages are way, way more expensive and prices don't budge, that it's just something has to give. It's
yeah,
not
but you
sustainable.
had a tweet. You had a tweet that said something along the lines of, "Why would anybody buy a home
I said
right
if
now?"
yeah. Well, it's a tweet. I mean, come on.
I know, but I'm saying if you were in that scenario, would you? That's in that case, it's kind of like a, oh well, I'm gonna wait until prices get lower kind of thing.
I mean, you
If
can
you were in
rent.
that scenario, though, would you wait?
You can rent a home. I mean, you don't, you can rent a nice home. I know there's people that rent
You
homes.
don't think? I mean, yeah, I guess you could rent it, but
What's wrong with renting?
I feel like that's probably correlated with whoever the owners is, his payments.
That's
So the
true.
rent of the home would probably go up. So
Yeah, but if they locked in, if they have lower mortgages than you would be paying now, it can be lower. If they're locked in at a lower mortgage rate.
yeah, but at the same time, it's probably like it's also correlated to the market around it. So like what rental prices are going for, you know what I mean? Which I think in general is probably correlated to affordability.
Yeah, yeah.
So
So why? But
I'm just saying, like, I would buy a home, not like the current home price. If I'm buying this for 30 years and it feels like the right home and I can afford it, isn't as big of a deal to me. If I think it'll go down over the next 3 years, 5 years, I don't really care. If it feels like it's the right need.
look, if you can afford it, that's fine. But under the current conditions, lots more people cannot at the current price. I mean, yeah, if you can afford it, yeah, why not? And you can still do everything you want to do. But it's just at the current prices, people will not compared to where they're when they were sub 3% mortgages versus 7%. It's just not like where's the money coming from? That's just my question. It's
Scotland says, what are your thoughts on Powell saying housing needs a reset?
correct. As two people that are not homeowners, yes, housing needs a reset.
But don't you think every non-homeowner thinks that?
Exactly. That was saying that as a joke. Like,
All right. All right. Well,
well, also, this is my thinking. The Fed don't don't fight the Fed. I know that's a joke people use, but seriously, if they're gonna crush housing, let them. Don't fight them. They want to crush housing because housing is such a big portion of inflation.
well, it's happening. People are not fighting the Fed right now. Mortgage applications are down. What do you say? 29%?
29%, 43% from
Would you
the
rather
seasonally adjusted peak.
would you rather buy a house right now or go long open door?
Depends what house, obviously. Like houses are, every house is unique, right? You could get a steal somewhere. But yeah, I'd probably rather buy a house than go long open door. I mean, come on, that's a zero. But
I guess the SBC is fake then.
that is
Credit
true.
credit to gosh, what's his name? I'm blanking on his name.
Red Boy or the
No,
comment
no.
Willis Capital on Twitter.
Yeah, yeah. We've had him on the show like a long time ago, but it's been a
That
while.
is true. We should get him back on.
All right, did you see this? Netflix is going to have a show on the rise of Spotify.
Yeah, I saw that. I thought it was strange because one, it's not that exciting. It's not like WeWork. Two, is it just for like the people that are bullish Spotify? I don't understand. I don't see what the audience is here, but I will.
I look forward to it.
I know we will be watching as people that are interested in that business, but I look. Maybe they should take that content spend and put that on some video games. I think maybe they could get better ROI. Who knows? It could be a good show. I know that maybe that moment where
People
Steve
like
Jobs,
Spotify.
maybe when it's a popular company, people people like to hate on it too. They think it's evil, which is not, but that's for another time. Now that moment in remember the story of how Steve Jobs called up Daniel Ek at like 1 a.m. and then just
Breathed into the phone.
breathed heavily into the phone. That could be a great moment, but I doubt maybe
The
if they
rest
have
of
a
it, the rest of
maybe
it's going to be boring as hell. It's them just like
well, if they get a good Jobs
writing
character,
code.
if they get a good Jobs character and they have that iTunes kind of competition type deal where they're the big bad ones and Spotify's trying to defeat them and then the labels are colluding, that could be interesting, right? You could have the labels, you could have some crazy,
Maybe people
basically
will finally understand that Spotify aren't the bad guys.
if they pin Spotify as evil in the show as the big evil people, then the show will be bad because it's just hard to do. Because it's like, okay, you have some tech coders and they're the big evil people. It's not that exciting. But if they have, the labels, you could have some like basically Succession type characters at the labels, the big,
Tell
how
you what,
the
Sean
label.
Parker is going to be back in
Yeah,
full effect.
Sean Parker will be in there. I don't know if they get Justin Timberlake again, like in the Social Network. I think there could be, yeah. Now that I'm thinking about it, if they do it correctly with the labels and stuff, that could be fun. However, there's not that much there. Like, I
Yeah,
think it's like maybe a limited series could be fun.
I found it. So someone tweeted this out that Spencer Walsh, who I would love to get in touch with, but doesn't have open DMs. So if you hear this, please open your DMs. He posted this sort of quote from I think it's from a conference call, but it's from the Figs CEO. You remember Figs, the like Scrubs?
Yeah, she was on Invest Like the Best, so it could have been from there too.
Oh, okay. Oh yeah, it was from there. Patrick says, what else do lazy companies do? And she said, outsource too much. They look where everybody is. They go to the competitive market, not to the place where nobody is. They overhire. They have 5 times as many people as they need to actually build a business the right way. They look for shortcuts on the product. Funding Facebook and Google all day or Meta and Google all day is not the right way to build a brand.
I was like, all right, I need to keep them on the watch list after hearing that because that sounds like a
Yeah.
very sound that seems like a very rational philosophy right there. Like, wow, that's just a breath of fresh air.
Yeah, hearing that that was probably the most like I was not that sold on the business because I don't see how Scrubs could. I don't understand the TAM for Scrubs, but
It's just I mean, it's just the whatchamacallit. It's just tough. The retail, but apparel's tough. Excuse me, apparel.
But I like that.
Yeah, that was great. Now on the flip side of bad expenses at a company, here's a tweet. Someone was exposing, I think there's like an expose on McKinsey bad consulting practices. This is a tweet from Mike Forsyth. I don't know who that is, but verified account. I don't know. Here's a grab from a slide deck McKinsey prepared for Altria around 2016, showing a mock-up of an iPhone app for a loyalty program for Marlboro cigarettes. Buy smokes, get little prizes like bottle openers. What a waste of money. One, to pay McKinsey a lot of money for this really poor looking PowerPoint slide about how you can make an iPhone app to give your users a loyalty program. Wow, what an amazing idea. A loyalty program. Who could think of a loyalty program? Oh, wait, every business in existence has not of a loyalty program. And second, the I mean, you don't need the loyalty programs for cigarettes. They have a highly like the whole point is they're highly addictive and you don't need a loyalty program. I don't know. I saw that and I was like, the expenses that are going around at these companies is just, especially large companies, is just absurd.
And that's a business with like 50% operating margins.
Yeah, the businesses have to be so good that even the McKinsey fees, excuse, I don't even know if I ever say that. It's McKinsey,
McKinsey.
whatever. McKinsey. Uh, they don't even, yeah, you can't even see them. All right, we probably got time for one more topic. I don't know. We're doing housing this week, starting a new recording. Tomorrow, I guess, on that new theme. Housing seems interesting. I guess we'll probably be discussing the housing market because all I thought about when we're looking at the first company we're doing at NBR is you kind of you have to have a little bit of thoughts of where the housing market is going to go when you do your valuation work on one of those. And it's tough. Like it's such, even though we were both debating that, it's a big unknown. Like a lot of things could happen, and a lot of it is controlled by the Federal Reserve, which is out of your control.
Okay, yeah, but I would say that like the housing shortage, the supply of homes is more important than the price of homes for these businesses, wouldn't you think?
Sort of, but also what if
They're all okay, other than Zillow. The rest of these are home builders that we're looking at. So I would think that they care
sort
more
of,
about volume than pricing.
it's hard to double your volume in a short period of time, and if prices go down a lot, that'll affect your revenue and margins. I mean, the operating leverage will be there on supply costs. So I think it matters.
Yeah, I suppose.
But we haven't, that is a
Well,
tease.
I know what you'll be saying about most of these businesses then.
Hey, who knows? I like the one we were looking at first. Um, Here's another topic that we can close off with. The mysterious ad slump of 2022, Vox article. Here's a quote from it. You can ask someone who runs a privately held media company off the record how their business is doing. I'm glad I run a private company, they said, which doesn't have to report its results in public. One of them told me this week. Seems like the advertising landscape as a whole is suffering. And I think it's pretty easy to see why, because there was such easy targets during the pandemic to advertise products when people had all this extra money and stuff like that. And now the return on that is just so much lower. So I think just looking at like having that at like the advertising landscape backdrop, or excuse me, having that the dynamic where the advertising whatever is just the overall spending is kind of slowing, right? Having that as a backdrop when looking at earnings reports the next few quarters will be important. Because some numbers might not be as bad as you think, and some numbers might be actually a lot better than you think, if you get what I mean.
All right, we got 2 minutes, 2 questions, or 2 comments, I guess, in the chat. The new Dahmer show with Evan Peters is great on Netflix. Other than that, Netflix hasn't made much of interest to me recently. I agree. I have not spent a whole lot of time on Netflix lately.
Yeah, I wonder if the fantasy shows and then the Star Wars stuff is kind of hurting them, if you know what I mean. Amazon's, HBO's, that could be hurting them currently. Because both those are getting gigantic audiences. I'm assuming Andor from Star Wars will get gigantic audience, and that's time spent that could be on Netflix.
Yeah, Rob McElhenney, who is from the show Always Sunny in Philadelphia, posted some picture of like the most popular shows right now. And it was okay. Yeah. Number 1, House of the Dragon. Number 2, She-Hulk, Attorney at Law. Number 3, Lord of the Rings, The Rings of Power.
She-Hulk, no way. She-Hulk.
Swear to God, yeah.
Dang, the Marvel is still alive and well, even though we were haters.
I think this was before Andor. And then 4, Welcome to Wrexham, which is their show on
he's talking his book. He's
on that's on FX. But
He's also at Apple, so you
I
can
don't
see
know if
why.
this is ratings or it just says most in demand breakout series. So most in demand, I would say. That means Netflix is not on that list of those four. No, yeah, but the Dahmer show is kind of interesting. I agree. Then Caesar says, I feel like no one's talking about the political risk with Brazil's elections, but maybe I'm overthinking.
That is correct. I had no idea there was a Brazil election or risks there. So yeah, we have no no thoughts.
I mean, it might be worth looking into. Yeah, I don't know a whole lot about it. I heard someone mention it, but I couldn't remember who. There was, Rob Citrone runs some big portfolio. He was on Capital Allocators a while ago, and I think he talked about it, if I remember correctly.
Is there an upcoming election? Is it this fall? I have to look into that. Could be interesting. However,
I might be getting the wrong country. He might not have been talking about Brazil.
also, like, what's going to happen? Is their currency going to devalue? Like, that's already happening. But
True.
could get a lot worse. I might shrug my shoulders to something bad there. I don't know anything about it. But that's going to do it. Thank you all for tuning in and with the questions, Scotland and Caesar and others. Sandeep, thank you. Check out Seven Investing, code money. We're going to be talking about them a lot over the next few months. So if you want to support the show and get better research in your portfolio, use code money, get $100 off your annual subscription. Remember, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. We are general partners at Arch Capital, and clients may hold securities discussed in this podcast. Thank you all for listening or watching. Remember, 12 p.m. Pacific time every Thursday or 3 p.m. Eastern time, right before the market is about to close. Thank you all for listening. We'll see you next time.